This week, we're going to highlight the results of USDA's Ag Outlook Forum that was held last week. We're going to turn our attention to Brazil, where they're harvesting beans in the north, but beans are still filling pods in the far south. We're going to come back and look at export trends here in the U.S. and wrap things up with a long-term review of November soybean futures. Hi, this is Brian Basting with Advanced Trading. Let's talk about the soybean market. We've moved in the last few days of February here, and there's a lot going on both in the U.S. and in South America. Before we get into that, however, let's take a look at the results of last week's USDA Ag Outlook Forum. We mentioned this last week that the USDA held their annual Ag Outlook Forum, February 19th and 20th. Let's take a look at the soybean supply-demand balance sheet. Again, these are not based on survey-based estimates, but the best economic projections USDA has. Acreage is forecast to increase 3.8 million acres. Total supply there up 213 million bushels from a year ago. Usage is forecast to increase by 207 million bushels, however. So ending stocks are forecast to only increase by 5 million bushel. Notice that bottom line though. Look at price. Just 3 years ago it was $12.40, projected this year to be $10.20, $10.30 next year. The message, price change happens and can be very fast. That's why we strongly encourage you to continue to work closely with your trusted risk management advisor to manage price movement and avoid price prediction. Let's shift gears now and focus on Brazil. Let's take a look at where those beans are produced in Brazil. Brazil, a very large country. Look at soybean production there in the far north of Mato Grosso, north to south there. Looking at Rio Grande do Sul. We've highlighted Rio Grande do Sul this week because the beans are much more immature in Rio Grande do Sul, only 50% filling pods compared to harvest aggressively taking place in Mato Grosso. Speaking of harvest, look at Mato Grosso here, 71% done in the north. Nationwide, 32% done, a little bit behind the 5-year average of 37%. But overall, a pretty brisk pace in the north. But notice in that far south again, Rio Grande do Sul, 0% harvested. Speaking about the weather, now let's take a look at the short-term trends. Our slides this week, as usual, are courtesy of T-Storm Weather. We're starting out here looking at some frequent thunderstorms occurring across the northern part of Brazil near term here. What we're looking at is that area of Mato Grosso may be slowed. The last 30% of harvest may be a little bit slowed. The rain will benefit that Mato Piba area in the northeast, however. Key message though, look at the south. Very little to no rain near term in Rio Grande do Sul. Let's look at precip totals for the next 14 days. Again, reemphasizing that at Rio Grande do Sul in the far south, 50% of those beans are still filling pods. And you're seeing below normal to much below normal forecast over the rainfall forecast over the next 2 weeks. So it's something that maybe is taking edge off the crop, but again, not a catastrophic situation. Still looks like it's going to be a record harvest. Let's shift gears now and focus on export trends here in the U.S. Our export trends looking here at the end of February, about midpoint of the crop year, they're about 32% lower than last year. Of course, the key to that has been, as we move forward, looking at China. China is well below the last 5-year average. But again, we've highlighted this before, but President Trump came out about 3 weeks ago and said that China may end up buying more old crop beans. This has given the market some support, but also resulted in increased price volatility. Let's wrap things up this week looking at trends in November beans. Now, November beans, as we tape here on Wednesday this week, are trading about $11.25 a bushel. Notice we're at the tail end of the crop insurance period there in February. It looks like the crop insurance average is going to be around $11.05 a bushel. Last year was $10.54, so about a 50% increase. But notice the increase in price volatility potential that we see typically from March 1st all the way to November 1st. That's why we strongly encourage you to continue to work closely with your trusted risk management advisor on your risk management positions for 2026. Now, if you'd like more information, please feel free to contact us at 309-664-2300. We'll put you in contact with one of our risk management consultants who'll be happy to visit with you at your convenience. Remember, we upload every Wednesday. Make sure to subscribe to our channel and never miss an update. Thanks a lot. Have a good week.